Hello, I am Elisa Eland, Associate Director of ISSS, and I'm happy to welcome you to today's tax information session. Thank you for coming. ISSS is co-hosting this session with NRVTAP, and you will hear more about them in a minute. But first, I'd like to thank the ISSS staff who are here with us today. Tracy Senti, Mike Heiss, Megan Carme, and Arwa Al-Busaidi. I have a couple of reminders about ISSS. We don't provide tax advice. There are specially trained tax advisors, such as at NRVTAP, who provide expert advice. So we can help connect you with the information and resources you need, but we won't be giving you advice. Please see our tax resource page, which has some valuable links, including resources for finding tax advisors. And now I'd like to introduce Maria Clark, the advisor for NRVTAP, and she will be our main presenter today. Thank you, Maria.
Thank you, everybody, and welcome. So we have a full agenda here today. So we're going to do some quick introductions. We're going to talk about federal taxes, give you an overview of how those work. Then we're going to talk about Minnesota state taxes and how those work as well. We're going to talk about tax services and support, so where you can get some help with your taxes. And we're going to do a demonstration of process and software, so what it would look like for you to do your taxes. At the end of things, we're going to do a Q&A as well. We're going to start with general questions. So if you have a question and you think that would apply to many people here today, that's a good one to ask kind of when we're still talking as a big group. We will stick around afterwards, and if you do have a personal question that involves you as an individual, we will help answer those questions as well, okay? But we don't need to tell everybody all of your personal individual details. So you've already met the U of M team. I'm going to tell a few other people. We have a couple of people actually from payroll. If you want to stand up in the back right over there, there are payroll representatives. We also have a representative from the U of M Law School, Libby, right over here. She's going to talk about the low income tax clinic. We have two representatives from our student org NRVTAP, Asuka and Zihao, right over here. And then finally, in the back, we also have Craig from the IRS. So he is here to help answer any questions and keep us on the straight and narrow. We thought we'd have one more, David, but he is at home with a new baby, so we are not going to have the pleasure of his company today. All right, so let's get into the topics here. We're going to talk about tax orientation. So this is focused for people whose tax residency is non-resident alien, okay? So all of the stuff I talk about today is for non-resident aliens. If you are a federal tax resident, we do help you in our tax clinics, but all of the rules I talk about today, they may not apply. So please do not use what we say as kosher for that. All right, a couple of words about groups. So we have two organizations that sponsor the tax clinic. The first one is the Non-Resident Tax Help Group. It's an IRS 501c3 organization. We provide tax services and education. We partner with NRVTAP, which is a U of M student organization, to help international students and scholars meet their tax requirements. So we had a sister organization called BTAP, which was volunteer. So we were non-resident, they were residents. Unfortunately, they are no longer active. So starting this year, we have expanded. So we are helping residents with their taxes this year as well. So even though I'm not going to talk about it here today, if you come to one of our tax clinics or go online, we will help you if you are a tax resident. All right, I'm going to turn it over to Asuka to talk a little bit about NRVTAP.
Hi, everyone. I'm just going to give a little more explanation of what our student group is. So NRVTAP is a nonprofit organization, and we are our IRS VTA approved program. And we are aimed at assisting international students and scholars across the University of Minnesota system. And we are the only organization that will provide the free tax assistance to non-residents at the University of Minnesota Twin Cities. So everyone can benefit from our service here. So just as a quick advertisement, we are looking for volunteers who would like to join us for the next tax year, not this tax year. So I'm tax year 2023. So the benefit of volunteering with us would be to work with people from all over the world and build lasting connections. And we can also build an understanding of the American tax system. I have been volunteering with for an NRVTAP 2 years in the past, and I can file my own taxes with no problem. And NRVTAP is a growing student group right now, and we have expanded services to all University of Minnesota campuses. We also do provide leadership opportunities as well. And leadership team recruiting for 2023 to 2024 will be opening on February 15th. So if you are interested in that, please see our website for more details.
All right, thank you very much, Jessica. Yes, I would strongly encourage anybody that's looking for a volunteer opportunity to think about volunteering with us. Not only do you, like you say, get to make great connections and learn about the tax system, but if you're a leadership team member, right, it's a fabulous experience to talk about through your job search, right? You get to deal with a lot of people, you deal with operating an organization, or we are essentially just like a little business. We run a huge tax clinic that's going to help hopefully 1,200 students this year, right? So that gives you a lot of things to talk about with a potential employer. So of course I would recommend it, but I do strongly recommend that you volunteer with us. Okay, let's talk about the federal tax system. Okay, so I'm going to start assuming that you basically know nothing about taxes. And I will start by saying that taxes are done on a calendar year basis. So January 1st, 2022 through December 31st, 2022. It is not based on like a particular job or a particular income document. It's based on all of the money in that year. It's also an income tax. That means it's about what money is coming into you. Some types of money that you might receive are going to be taxed, but not everything is going to be taxed. The more that you earn, the more tax you're going to pay. So think of it like a layer cake, right? You pay 10% on the first one, and then 12% on the next layer, and then 24%, and so on up. There are lots and lots of special rules, exemptions, and adjustments. And all of those rules depend on your personal individual situation. It can be as simple as 1 day's difference of when you first arrived in the US can make thousands and thousands of dollars difference in your tax return. So if you ask a general question like, am I going to get my money back? I cannot answer that question for you until I know all of your details. So get ready to talk to me for a while. In addition, or kind of in comparison to an income tax, right? Sales tax, when you buy things, those are going to be charged automatically. And generally, there's not going to be any kind of a refund for those. So if you buy a car or something like that, and you pay a bunch of sales tax, unfortunately, you're not going to get any of that money back. That money is just sent off to the government. All right. The way that the US tax system works is that it's every person's individual responsibility to calculate and pay their own taxes. The tax program is kind of a pay-as-you-go system. So the tax authorities expect you, as you earn money over the course of the year, to be paying in approximately the right amount of taxes over the course of the year. If you owe too much money at the end of the year, they will want to charge you some interest or penalties because they said, you've had that money too long, we should have gotten it sooner, we want you to give us some interest on that to pay. So when you get money from somebody, the organization that gives you that money may withhold, which means send directly to the tax authorities, some amount of that money. They only do that when they are required to do that by law, right? You can't ask them to do it when they don't have to, and they will say yes, they will not do that. There are rules about how they determine how much to withhold. And it's always going to be an estimate. It's never going to be the right amount, the exact amount of tax you owe. Again, personal situations determine how much tax you owe. Sometimes you can give feedback about how much you're going to have them take out, but other times it's going to be a set amount. You can always send in extra money yourself if you need to or if you want to. But generally, you're going to rely on your employer or whoever's paying you to send the money in. At the end of the year, or after the end of the year, actually, you have to complete a federal and state tax return to determine how much tax you actually owe. And then when you file your taxes, that's when you send it in to the tax authorities to tell them what you've calculated. And you may need to do this, even if you don't owe any taxes, even if you don't get a refund, you still have to tell them how much income I had, what were my personal situations, and this is why I don't owe any taxes, or this is why I don't get a refund. And then ultimately, everybody as an individual is responsible for the information on your return. All right, when you file a tax return, you need a tax ID number. And the type of number that you're going to get will depend on your personal situation. If you are authorized to work here in the US, you will get a social security number. That can be for on-campus employment or OPT, CPT. If you get income but are not authorized to work, you will need to get an individual taxpayer identification number. This is usually for people that are on a scholarship or a fellowship. If you do not need to file a tax return, you cannot get a tax ID number. Even though I know some banks and brokerage accounts want a tax ID number, if you don't need to file a tax return, you won't be able to get one. The IRS will only issue those to people who have to file a tax return. If you do need to get an individual taxpayer identification number, please contact us. We can provide free assistance to help you get that tax ID number. All right, what happens after you send your return in, right? Just because you sent it off does not actually mean everything is good always. So after you e-file your return, you get a notice from the IRS that says either they've accepted it or they've rejected it. Just because they say accepted does not mean that they agree that it is correct. It just means that they've passed kind of the first round of tests, like your name and your social security number match, your date of birth, the math on everything works. Your W-2 information matches what was already sent to the IRS, so they know at least those first checks are good. The IRS will then process the return. This will take anywhere from a few days to a few weeks or longer if they have additional questions. If they think there is something that is missing or that they don't understand, they will send you a letter. They are not going to send you an email. They are not going to call you demanding payment. We still see a lot of scams where people say, no, you have to send us a credit card or like a debit card right now. Those things are scams. The IRS is never going to do that. But if they do send you a letter, you do need to pay attention to it. But if they like it, if they've done their second round of checks and everything looks good, they will send you your money back. And this is the time where you basically can consider that the IRS has agreed with your return. If you owe money and you send it in, the IRS is not going to send you any kind of acknowledgement. They're not going to say, yep, we think everything is good. They're going to basically just take the money and never say anything else. And that's your sign that it's good. So in that case, no news is definitely good news. If the IRS wants to, they can decide to review your return again. They have up to 3 years to do this for any reason whatsoever, but they can do it forever if they suspect fraud, that you're deliberately filing an incorrect return to get a larger refund than you're entitled to do. So, all right. So let's talk about the things that affect your US income tax. So this is a partial list, right? And it's already a long list, but the biggest one that we're going to talk about today, right, is US tax residency and treaty benefits that you can get based on that residency. In addition, marital status affects your tax return, as does your income, both how much income you have as well as the type of income, because not all types of income are treated the same. It also matters where the money comes from, right? Does it come from the US? Does it come from outside of the US? Then it also matters how you spend your money, right? How do you spend it? Do you support anybody, a child or parents, people that you live with? Are you repaying some loans based on some things that the government thinks would be good for you, like a student loan or buying a house? Do you pay tax to other organizations of the government? Or do you pay school costs to go get a degree? Those are a small list of some of the things that can affect a tax return, okay? So as you go through the process, we would help you identify if any of those or any other ones would apply to your particular situation. Okay, so how do we determine what your US tax residency is? If you are a citizen, it's super easy. You are automatically a tax resident. You will always be a tax resident until you give up, or if you ever give up your citizenship. An alien is somebody that is not a citizen of the United States, either by birth or naturalization. This is an IRS term, not my term. And a resident alien is basically taxed like a US citizen. There might be some treaty benefits still, but you're going to be taxed just like everybody else, which means you get to pay tax on your worldwide income. No matter where that money's coming from, the IRS would love to have a little bit of it. If you are a non-resident alien, you're subject to special rules. There are very limited deductions and credits is the bad part of it, but the good part of it is that you're taxed only on your US source income. So if you go home over the summer and you have a fabulous job in your home country, the IRS does not need to know about any of that money. You don't have to pay any tax on it. You can ask that man up there and he will agree. All right, so who is a non-resident alien and who is a resident alien? A non-resident alien is somebody that does not have a green card and has not passed the substantial presence test. And here's the math for that test. I'm not going to go through it, but this is a test that's applied every calendar year. So you could be a resident 1 year, a non-resident another year, and so on. Some people are exempt from this test. They do not have to use the substantial presence test. But if you pass that test, or if you have a green card, you will be a resident alien. In addition, if you are a non-resident alien or a dual status alien, which I'll talk about in a minute, if you are married to somebody who is a resident alien at the end of the year, you can also choose to be a resident alien as well for the whole year. The advantage of this is that you get to file a joint return with your spouse, you get the standard deduction, but you got to pay tax on your worldwide income. So maybe it's a good deal, maybe it's not a good deal. One other important thing to note, resident for tax purposes does not mean resident for immigration purposes. And resident for federal tax does not mean resident for state tax, which does not mean resident for immigration purposes. So every different organization has a very different definition of what resident means. All right, so I said some people don't have to use the substantial presence test. Here are those people, which is probably a lot of you today. So a student who is on an FJ or Q1 visa for the first 5 years that they are in the United States. It's 5 calendar years, not 5 duration years. In addition, a teacher or a trainee on a J1 or Q1 non-student visa who is not previously exempt for any part of 2 of the prior 6 calendar years, which is a mouthful to say and to try to figure out. Family members use those same rules. So whatever your primary visa type holder is, you use those same rules. If you are an exempt individual, you do not count the days that you are in the US towards the substantial presence test. This usually means that you're going to be a non-resident alien in that year. It's not like a 100% guarantee, it's like a 99.999% guarantee. And exempt does not mean exempt from paying taxes. So just because you're exempt from the substantial presence test does not mean that you don't have to pay tax. If you have US income, you still will need to pay tax. All right, just to make life a little bit easier for everybody, we have a tool out on our website called Am I a Non-Resident Alien? Very imaginatively named. And basically all you have to do is go into that. If you enter your visa and your US visits, it will do all of the math to determine your federal tax residency for you. You can select the year, you can put all of that information in there. All right, so if you have a question about that, that's a really great way to start. If you are not a US tax resident, that means that you are a resident of a different country. All right, and that's important to know for treaty benefits. So the question is going to be, where did you live before you came to the United States? Usually it's pretty simple, right? It's your country of your passport, your country of your citizenship, it's the country of your home and your family. You're going to be a resident of that place. If for some reason those don't all agree, then we need to look at a few more details like, okay, how long were you living in this other country? You know, was this a temporary visit or a permanent move? Things like that. So if you have questions about that, please contact us. We can help you work through those details. Usually it's pretty straightforward, but if it's not, let us know. We'll help you figure it out. Okay. I mentioned dual status aliens. So somebody can be a part year non-resident alien and then a part year resident alien. They have very special filing requirements. Usually this will occur in a couple of situations. So somebody comes into the US and passes the substantial presence test, so they're not exempt. This is like an H-1B visa person that comes in. It can be somebody that gets a green card during the year and then all of a sudden, boom, on that day they get that green card, they are now a resident. It can also be a student or an individual that leaves the US after passing the substantial presence test for that year. So that would be somebody that was leaving, say in June, July, August, something like that. All of those dual status returns, unfortunately, are out of scope for us. The IRS has said it's out of scope for VITA clinics, and I'm not unhappy about that because they are very complicated to do. So if you find yourself in this situation, you're going to probably want to seek some professional help to get your taxes done. All right, let's talk about what the effects of tax residency are on your income. Okay, so if you receive a gift, right, if your family gives you money so that you can come to school here, well done on choosing that family member, but it's not going to be taxed, right? The US does not tax the recipient of the gift. If it's a large enough gift, then the people that give it to you might get taxed, but we're not going to worry about from here. As a recipient, you don't have to pay any taxes. What about working at a job? If you're a US tax resident, it's going to be taxed no matter what. There might be some treaty benefits that apply in a few occasions if you're a resident alien, but generally you're going to have to pay taxes on it no matter where. If you're a non-resident alien, you are going to get taxed as well, but there are often treaty benefits that may eliminate some or all of that tax that you have to pay. If you work outside the US and you're a resident, you still got to pay taxes here to the US on it. There might be some credits that you can use to offset it, but maybe not. But if you're a non-resident alien, no taxes at all, right? Remember, if the money comes from outside the US and you're a non-resident alien, the IRS just pretends, right? It doesn't exist. If it is investment income, so this is like dividends or capital gains, in the US for tax residents, it's going to be taxed, often at a lower rate. For non-resident aliens, it is also taxed, but it is complicated. It can be not taxed, it can be taxed 30%, or it can be taxed at a different rate based on a treaty benefit. So it gets rather tricky there. Business income is quite complicated for everybody, but generally, if you're going to be a US tax resident, you're going to get taxed no matter where you're from. It's just a question of how complicated it is. And then non-resident aliens, again, if it's US, you're going to get taxed. It's complicated. But if it's from outside the US, then you don't have to pay any tax on it. And then finally, the last one, the big one, scholarships and fellowships. All right, so if you are a US tax resident, it is not going to be taxed if it's called a qualified scholarship, which means it gets spent on certain types of expenses like tuition, required fees, required books. There's a few other criteria, but generally everybody here probably meets those. But if it's not spent on those things, then it is going to be taxable income. If you are a non-resident alien, you've got a few more options, right? If your scholarship or fellowship is from your home country, it doesn't matter how you spent it, right? It's from outside the United States. The IRS is not going to tax you at all, right? It's money that's not related to you. Again, just like with a US tax resident, if you spend it on tuition and required fees and books, it's not going to be taxed. That's called qualified. You may have a treaty benefit. That means that it's not going to be taxed at all, no matter what you spend it on, right? Might go to Florida for a week to get away from this cold, horrible weather. If you have a treaty benefit, that's totally cool, or totally warm as the case might be. You're not going to have to pay any tax on it. But if you don't have a treaty benefit, just like everybody else, then in the US, you're going to have to pay tax. Okay. All right. Special tax rules for non-resident aliens. So if you are exempt, you have to file this form called Form 8843. It's a simple form, basically 2 pages. It just says, hello, I'm here. I'm on a visa. This is where I'm studying, or this is where I'm teaching. You don't need a social security number or an ITIN number to file this form. If you have one, you'll put it on there, of course, but you don't have to have one to file that form. So if you're here, you don't have any income, you don't have to file anything except that Form 8843. If you do have income, you have to use the Form 1040-NR for non-residents. It's going to be due on April 18th this year. All right, so there's a few holidays right around the 14th, 15th, which is normally when things are due. It's going to be due on the 18th. It can be e-filed in most situations. Sometimes you have to do a little bit of fiddling and it's a little bit of a pain. So we can definitely help you with that. But I would say if you've got a social security number or an ITIN, probably in 99% of the cases, we can get it e-filed. Probably 99.95% of the cases we can get it e-filed. If you do have to file it on paper though, here's where it goes. Special address down in Austin, Texas, or if you're sending it with a check, you have to send it over to Charlotte, North Carolina. Okay, so I'm going to give a quick overview here. So if you have, for a federal tax for non-resident aliens, so only US income is taxable, but you have to file a tax return no matter what amount of income you have. You cannot file a joint return with your spouse. All right, so if you are married, you still need to say that you are married, right? You are married. You probably would like your spouse to say that they are married to you. You still have to say that you're married for tax purposes. It doesn't matter if your spouse is in your home country or if they're here with you or wherever. Wages are taxed. You may get a treaty. Scholarships free for everybody except for room and board. If you have self-employment income, so this would be something that's reported on a 1099 NEC or a 1099 miscellaneous. This would be like driving for Uber or DoorDash or having a little shop on Etsy, things like that. That is self-employment income. You do need to report it to the IRS. It is out of scope for us. We can't really help you with that one, but it does need to be reported. So you may want to get some help with that. And then again, investment income like dividends and capital gains, generally it's going to get taxed at 30%. Sometimes it may get taxed at a lower rate based on treaties. If you have bank interest though, bank interest like from Huntington or even like a bonus for opening an account that gets reported as bank interest, that is not taxable for non-resident aliens. So if you get one of those forms, a 1099 INT from a bank, you are not going to have to pay any tax. And then finally, unfortunately, so cryptocurrency or any digital assets are out of scope for us. That's an IRS limitation. We cannot help you with that. Right? Okay. Next start here is itemized deductions, right? So if you are a US tax resident, basically you get a certain amount of income that you do not have to pay taxes on. It's called the standard deduction. Unfortunately, for most non-resident aliens, they do not get to take that standard deduction. Students from India do, but it's only the students, not the teachers or researchers or scholars. It's only students. They get to take the standard deduction. Everybody else does not get to use the standard deduction. They have to itemize their tax returns. And you also get no education credits. So if you have education expenses, if you are a US tax resident, you can try to claim the American Opportunity Credit or Lifetime Learning Credit. And so you get some money back on the money you pay for like tuition and books. But if you are a non-resident alien, you do not get any of those credits, unfortunately. All right. One final comment here, and this is for our payroll friends. Non-resident aliens who are on F1 and J1 visas do not have to pay Social Security and Medicare taxes. Resident aliens, so if you're here long enough, resident aliens do have to pay Social Security and Medicare taxes. And if you are here on a -2 visa, thank you, you also will have to pay. So if you are a spouse that's here on a J2 visa and you are working, you will still have to pay Social Security and Medicare taxes, even though you are still a non-resident alien. If you are not supposed to pay those taxes, you can get a refund. The first thing that you have to do is ask your employer. The University of Minnesota is usually really good about this. Number one, they don't often take it out when they shouldn't. And number two, if they do take it out by mistake, they will usually fix it for you. Not everybody is going to be good at that, right? So depending on who you go work for at an internship, if they do take out those taxes by mistake, they may or may not give them back to you. We can help you with that. These are the forms, the 843 and 8316. We can also help you with that as well. The Social Security and Medicare taxes are separate from income taxes. So if you get your W-2 and you find that you have those taxes withheld, please send us an email. We'll be happy to help you, but we will not help you until after the filing season is over. So we will contact you probably in late April, and then we'll start working on that with you and your employer, okay? Okay, so we're gonna move on from federal taxes to Minnesota taxes. And like I said, Minnesota has a different definition of residency than both immigration and the IRS does. So for a non-resident alien in Minnesota, your status as a resident will depend on the 183-day rule. All right, and that rule is that you must have spent at least 183 days in Minnesota, so physically present here. Any part of a day will count as a day. So for a continuous visit, that's July 2nd on. In addition, you must rent, own, occupy, or maintain an abode. An abode is a legal term. It's a residence in Minnesota that is suitable for year-round use, very important when it's super cold out, that is equipped with its own cooking, bathing, and sleeping facilities. So dorm rooms do not qualify most of the time, right? Because they do not have their own self-contained bathing and cooking facilities. If both of those two conditions apply, you will be a Minnesota resident for the time that the second condition applies. All right, so if you are paying rent on an apartment in Minnesota and you have been here for at least 183 days, you will be a Minnesota resident for as long as you've been paying rent, even if there's some period of time when you are not here. Why does this matter? So you could be a non-resident of Minnesota if you were here for less than 183 days. This would be somebody typically that comes here for the first time in the fall semester. You could also be a non-resident if you were here for longer, but you never rented, owned, occupied, or maintained an abode at any point in the year, right? So this is somebody that stayed in the dorms all year. You could be a part-year resident if you were here for at least 183 days and you rented an abode, we'll just say that for brevity's sake, for some part of the year, right? It could be one day, it could be 11 months. but you were here for at least 6 months, basically rented for some part of the year. And then you would be a full year resident if you were here for at least 183 days, and then you rented for an entire year. So that one is important because if you go away, let's say on a summer internship, and you don't find anybody to sublease, right? So you rent an apartment the entire year, even though you're not physically present in Minnesota during the summer, your residency in Minnesota will still remain. You'll be a full year resident of Minnesota. So only part year and full year residents are eligible for the property tax refund. And then, oops, I don't have it in here, but the other part of it is, so for Minnesota taxes, so if you are a Minnesota non-resident or part year resident, you will only owe Minnesota tax on Minnesota income. So that would be things like working in Minnesota, scholarships from the University of Minnesota or other organizations here in Minnesota. If you are a Minnesota resident for the full year, you owe tax on your entire federal taxable income. So if you go have a fabulous internship out at Google over the summer in California, but you still rent your apartment here, you will owe tax in Minnesota on the money that you earned out in California. And you will owe tax in California on the money that you earned in California too. This is totally not fair. It's totally double taxation. If there are any people studying law that want to get involved with changing Minnesota's legislature requirements on that one, let's talk to you. But otherwise, I'm sorry, it's double taxation. That's kind of the way it works. Okay, talk about the property tax refund, right? Because everybody wants the property tax refund. So to be eligible for this, you must be a full year or part year resident. So you must meet that 183-day rule. You cannot be a dependent, right? This is the really big one that gets a lot of people. You must have provided over half of your own support. So if you think about all of the money it takes to go to school here, right? To pay for tuition, to pay for rent, to pay for food, really warm winter coat, all that kind of stuff, that adds up to a lot. So you must have provided over half of it. That has to be provided either through scholarships and fellowships, wages earned, or student loans. If your family provides over half of that money, you are a dependent and you are not eligible for the property tax refund. You must also live in a unit that's an abode, has all the things. It also must be subject to property taxes. So there are quite a few co-op housing units around the Twin Cities where they get a discount. They don't have to pay property taxes because they're a nonprofit. So if you don't pay property taxes to start with on your unit, then there's no refund of those. The good news is it's available for any filing status, so it doesn't matter if you're single or married. If you do have a house, if you own a house, you must have a valid Social Security number to be eligible for it as well. All right. So this is just a little shot at the a worksheet that we have to help you figure out if you're eligible or not, right? Because we need to look at what is your total income, what is your total expenses, to try to look at that 50% rule, right? So look at how much is tuition. So right, like list price on tuition is like $35,000 a year, right? It's a lot of money. You got to have rent that's going to come from your property tax statement, your certificate of rent paid. Food, you know, so the University of Minnesota says $2,500 a semester for like a middle plan. Maybe you spend more, maybe you spend less. Clothing and funds probably should not be a zero amount, hopefully, otherwise you're not enjoying life here in Minnesota. So, you know, you're looking at probably something north of $42,000 to go to school here for a year. So that means that your job has to be earning you more than $21,000 or so, which if you have a great internship, it's definitely possible. But you just need to look at all of that information. So the Minnesota Property Tax Guide has a lot more about how to do this. We'll walk you through it. Here's where it is. This is where it is here. Okay. So coming back to the working in another state. So if you did work in another state, we also have another guide for you to talk about how do you determine your Minnesota residency? How do you determine if you need to pay Minnesota tax on your income there? This is something that coming to one of our tax clinic appointments is very useful for, because we can help you through that calculation, help you understand kind of what your obligations are there, make sure that you do it right. All right, if you only have to file the form 8843 for your federal return, which is the form that just says, hello, I'm here, I have no income, I'm just a student, there's nothing that you have to do for Minnesota. If you are a non-resident in Minnesota and you are a student from India, you have to file if you have more than $12,900 of income. For everybody else, you have to file if you have more than $5 of income. So generally, the rule is if you have to file a federal return, we say you should file your Minnesota return as well. You have to do the federal return first anyway, because the federal return provides numbers that you use to start the Minnesota calculation. So it starts with federal adjusted gross income. You do some additions and subtractions, look up the number in the tax tables to find the tax amount. Okay, Minnesota also has the same filing due date. So it is April 18th. The property tax refund, though, is not due until August 15th. So you've got more time if you wanted to wait. I would say you should go ahead and send it in if you can at the same time, because you can electronically file it all together. Makes it super easy. But you should know the refunds don't get sent out until after that due date or right around that due date. So if you do the property tax refund, it's not going to show up until August sometime. So please do direct deposit, because if you move, you don't have to worry about your check making its way to your new address. It'll show up in your bank account no matter where you physically are. And then you can amend returns for up to 3.5 years if you find that you made a mistake. Here's more information and links, so on and so forth. Okay, so that is a really quick review. Hopefully everybody's mind is all completely blown. Say, oh my God, this is too complicated. I can't do this. Oh my word. How could I find some help? Oh, please let me help you. I would love to help you. All right. So the North and NRVTAP International Tax Net, right? So we are an IRS VITA FSA clinic, right? Which is a whole bunch of letters. So VITA stands for Volunteer Income Tax Assistant. This means that we are volunteers. We don't get paid to do this, and that we provide tax help to you. It also means that it is free, 100% completely free, right? We can't charge you any money. We can't ask for any money. We can't put a tip jar out there. We can't say, buy me a cookie. You know, we can say nothing. We can say nothing about that. And we can't take your information and use it anyway, right? We can't send it off to these people that are going to send you like notices, say, hey, buy our stuff. Or we can't tell you to go say, hey, you know, Libby over here, she's really good. You should go see her. It's going to charge you a lot, but she's really good. We can't say anything like that, right? We are 100% always free. We're also FSA, which stands for Facilitated Self-Assistance. That kind of means what it sounds like, right? Is that we help you help yourself. So I would say the easier way to say it is a DIY plus help, right? You're going to be doing your tax return. We are going to be helping you do that tax return through that process. The criteria for help with us, you've got to have a school email. Usually that's going to end in .edu. So everybody with a U of M school email qualifies, no problem. Occasionally we see people from other schools, like international schools, where it ends in like a .it or UK. Those are all fine as long as it's associated with the school. We don't have a residency requirement anymore, right? We used to say we only help non-resident aliens, but now we basically help everybody except dual status aliens. Sorry, guys. We do have an income limit, right? If you are fortunate enough to have income over $73,000, the software has a hard income limit coded into it, and it cannot do that. We do have another software that may help, but it does not do non-resident returns, and it does not do some other circumstances. So if you run into the income limit, let us know. We can try to screen you for that other one. Otherwise, congratulations, you've earned a lot of money. You might have to pay to get a little bit of help. And then there are still some types of income out of scope. I've kind of mentioned some of them. Cryptocurrency and digital assets are the big one. Self-employment income is another one. Oftentimes the software will do that stuff for you, but we can't help you with it, right? So you're going to have to kind of do a little bit more investigation and figure it out. Or hope that you made some money on crypto and you can pay somebody to do it for you. All right, so what do we provide? 24/7 access to the software. Federal and state returns, all the states that are out there, you can get them, you can do them. E-filing, both federal and state. We've got our tools. We have a MIA non-resident alien. We also have treaty benefits, right? So I am a non-resident alien student from Bangladesh. What are my treaty benefits? Go in there, it'll figure it out. It'll also help you to look to say, hey, do my income documents match my treaty benefits, or do I need to make some adjustments when I file my return? We have guides, including a new personalized guide. It is not quite out yet. We're just doing our last little bit of beta testing on it, but it should be out in the next few days. Basically walks through with a little interview about questions. I'm going to demonstrate it here for you today so you can see. Makes it a lot easier to figure out what things you need to do when you actually do your return. We have individual support for you. Currently, we have 38 trained and IRS certified volunteers to provide tax assistance. We have tax clinics where you have an appointments-based assistance. So we have a bunch here at the University of Minnesota. They will actually be, for the most part, in this room right here. We're also going to be at Duluth, Lehigh, and Appalachian State University. We have remote tax clinics as well. So if you can't make it to one of our physical ones, you can always come to one of the remote ones. One thing that we do too is we do have a 1 appointment limit. So if you make an appointment, you need to show up. You can cancel it up to 4 hours in advance, but you need to show up if you've got that appointment. We also will take walk-ins at our in-person clinics. So if you need to come in for an additional question, or if you didn't show for your appointment, you can still walk in and we'll help you there. We also have office hours as well, which are 15-minute remote appointments. So if you just have a quick question, think you're done, want somebody to look it over, that's a great way to do it. We do provide email support as well. Some things we can help with pretty well over email, but sometimes we really need to see the tax return. So depending on what your question is, we may say, look at the guides, or please make an appointment or walk in for an appointment. And then our support is provided to everybody, right? If you are a member with us, if you've got a school email, it doesn't matter as long as you can make it in, which is not always as easy as it should be, unfortunately, here at Carlson. You can come see us at our tax clinics. All right, I'm going to skip this. This is all the different guides. The one thing I will mention on here is that we do provide support for multiple states: Minnesota, Pennsylvania, North Carolina, California, and Maryland. All right, if you worked in a state that was not one of those and you want some help, please email us. We will see if we can give you some guidance about what to do on your state. If we see enough of those requests for that particular state, we'll put a guide out there for it as well. All right, this is just based on what the demand is. All right, so if you go to our website, you can request a free membership. Again, usually it's about a day turnaround time or less. Get organized, gather all of your income documents, confirm that your return is in scope, create a personalized guide, and then prepare your return. Or you can kind of go through the steps one by one on your own, confirm your residency, confirm your treaty benefits, look at the right guide, go on from there. And then we are here basically to help you throughout the entire process. Just to kind of give you a feel, so our numbers last year, so 980 federal returns, essentially 1,100 state returns, over almost $550,000 of federal refunds for our students that we helped last year. That's not count state returns, so that's just the federal numbers. 1,800 members and 31 trained volunteers, 19 clinics, and then these are some of the schools that we supported. So this year, our goal is to help 1,200 students file their tax returns, have 2,000 members. We've got 38 volunteers who are already doing really well on that. And right now we have about 1,300 appointments available. So if you would like some help, we would love to see you at one of our tax clinics. All right, here's where on the website you can request the membership. We do have emails out there for different purposes. So our NRVTAP email at this university is kind of a student org email. So if you're interested in a leadership position, that's a great place to reach out to us. If you want to be a volunteer for like a tax volunteer, that's another great spot, volunteer at nrvtap.com. Support is there for tax clinic appointments, membership issues, website things, that kind of stuff. Tax assistance, that's a technical tax issue. You know, I can't e-file, I got rejected, what's going on? ITIN and NRVTAP is if you need an ITIN number. So if you need some help with that, please just email us. And if you send it to the wrong one, we'll forward it over to the right one and you'll get the answer eventually. All right, and with that, that is the help that we provide for preparing taxes. After the tax return preparation is done, there is still support for you. And I'm going to turn it over to Libby to talk to you a little bit about that.
Good morning, everyone. So I'm here on behalf of the University of Minnesota, where we have a tax clinic for low-income taxpayers. And we are, that's up there, Mondale Hall. So at the U, or at the law school, we have multiple different tax clinics, or we have multiple clinics, and a clinic's kind of like a medical residency. So it's when you get the chance as a student to practice law and you're supervised by an attorney. And the U has more than 25 clinics. They range from like family law to like consumer protection to business, and we do low income tax help. So we were founded in 1981. I think we're one of the oldest tax clinics in the country. And our supervising attorney is Caleb Smith. So he oversees all of the students. And Professor Smith is amazing. He had a fellowship at Harvard, studied at Lewis and Clark School of Law, and he's just an absolute whiz when it comes to tax issues. Currently, we have 9 student attorneys and 4 student director attorneys. The student attorneys mostly are all second-year law students. So law school in the States, it's a 3-year program. And in your first year, you take all of these required courses, things that everyone has to take at every law school. And in the second year, you can start thinking, hey, like what's something I'm interested in? Oh, tax. And so our student attorneys generally tend to be second-year law students, and our student director attorneys were second-year law students, now third-year law students. And I'm a third-year law student, so I'll graduate this spring. And each student attorney usually has about 4 clients. And then Professor Smith oversees all of the clients and kind of approves everything that we do. So for example, right now I have 3 clients. One client, I'm helping him file an offer in compromise because his income's so low that he can't pay his tax liabilities. Another client I'm helping with, she was supposed to receive a stimulus check, and we're trying to find it because it disappeared. And then another client, I'm helping represent him in tax court because he drove for Uber and Lyft, and there was some mix-up in calculating his miles on his tax return. So we do a lot of different kind of work. And we are located in Mondale Hall, which is, on West Bank, very close to the Carlson School. And we're funded by a grant from the IRS's Low Income Taxpayer Clinic program, and we provide free legal assistance and representation. So I kind of touched on these things, so I'll just say them again. We advise clients in tax issues such as, when you enter into audit, when you have issues with filing, and when the IRS is trying to collect on you, or the Department of Revenue in Minnesota, because we do both Minnesota, so federal and state taxes. We represent clients in tax court and federal district court, and being able to choose which one depends on the issue that you have. And we also advocate for state policy changes that benefit low-income taxpayers. We have a really, really wonderful relationship with the Minnesota Department of Revenue. And if you Google University of Minnesota Low-Income Taxpayer Clinic, there's a whole bunch of stories of change that we've been able to effectuate based on our relationship with the Department of Revenue in Minnesota. They've been super receptive to us saying, hey, we see something that's not quite right for low-income taxpayers, and then them changing their process. So that's been a really cool thing that's happened over the past 5 years. So we don't help with preparing your tax return. So that's something that's different. We're kind of like the, like if you have to go to urgent care and you have like an issue that happens, we try to help fix it after your tax return is filed. So it's like if you have an issue that arises after you file it. So I'll kind of give some examples. But first, who do we help? We help low-income taxpayers. And so this is a little bit different from the VITA guidelines, which I think was $73,000. Ours is right around $13,000. So if you make more than this, you would not qualify for our help, but we can also try to help point you to somewhere else where you could get help. But those are the 2022 income numbers. And there were some excellent slides earlier that talked about what goes into your income. And yeah, so when you're calculating it, if you have a qualified scholarship, all of those things, but ultimately the number you come to, if it's less than $13,500, then you can contact us. So let's talk about when people start to come and utilize our services. Just generally, so I have a hypothetical up here, but I'll just say generally people come to us when the IRS starts to take action because you have some sort of issue with your tax return where you didn't report all of your income, like you missed some income, or yeah, your tax liability is higher than you thought that it was. And so maybe something will happen is called like wage garnishment, which is where the IRS starts taking money out of your paycheck, or there's something called collections when there's like a lien on your property. When you get these letters from the IRS, they can seem really scary. And that's generally when clients come to us. If they say, hey, I have this letter and it says it's a notice of deficiency. It says that I owed more, but I don't know if I did. Can you help me? That's when we come in, because we can help provide options when you get these scary letters and you're not quite sure what to do with them. These are 3 different options that we consider and we would advise you on if you came to our tax clinic. A lot of taxpayers don't know that there are options. So when you can't pay your taxes and you have these letters and you're not sure what to do, and all of these options are super fact specific. Just like we evaluate, you know, how long you're going to be in the States. Maybe right now you don't have a lot of money and your income is under $13,000, but then you get this internship at Google and you're going to make $50,000. Like, we evaluate all these different facts. The first option, if you can't pay an outstanding tax liability, is an installment agreement. And what this is you just pay over time, like similar to, you know, if like you paying like your tuition, like every semester. And this, when you do this, you have to continue to be compliant with your tax responsibility. So every year you have to continue to file your taxes and be on time. And we can help negotiate the terms of this between you and the IRS, or you and the Minnesota Department of Revenue. Another option is called currently not collectible status. And what this means is that you'll continue to owe debt to the IRS, but the IRS agrees to suspend them trying to collect, right, from your paycheck, or them putting what's called a lien on your property. And they'll potentially stop sending you letters as well. And this means that you still owe the debt, but it's like temporary breathing room. It's like a pause on the IRS saying, hey, you need to give us all of this money. And then the last is offer and compromise. And we do a lot of these. And the reason that we prefer these is because an offer and compromise is permanent, whereas like CNC status, so currently not collectible, that's like a temporary thing. So an offer and compromise is when you settle the debt with the IRS for less than the full amount that you owe to them. So this means you can't pay the full amount, can't pay $1,000. So we negotiate with the IRS for maybe you to pay like $400 over a series of months, or all up at front. This also means that for the next 5 years, you need to be current on your taxes. You have to file your taxes every year. You also need to be current on your taxes for the years preceding too. So if you've gotten this like huge debt from the IRS and you're like, you know what, I'm not going to pay taxes. American taxes are way too scary. That would be a fact that would not be very good for you, because like we need to have you be current on your taxes when we go into an offer and compromise, or we can also help you get current on your taxes. And how we choose which one is called, it's by RCP, which is reasonable collection potential. So what we would do is we would take your equity and assets. So like, do you own a home? Do you have a car? You have a retirement account? Do you have life insurance? And then we would then look at your necessary expenses and how much your income is. So for example, the client that I'm working with right now, his equity and assets is 0. And his income and his necessary expenses are like somewhere around like $2,000 every month. And so he's a really, really good candidate for an offer and compromise because he just simply can't pay. He does not have the money. So if we were to work with you on this, basically you give a roadmap of your assets, which can take about a semester for us to put together. And then we would send it to the IRS. Maybe they accept, maybe they don't. But the big thing is that if we don't think that you're a good offer candidate, we wouldn't submit you. Instead, we'd say, hey, maybe an installment agreement might be a better option. But all of this depends on how long you're going to be in the States, depends on like what your income potential might be after graduation, what it was before you came. There's just a lot of fact-specific things that go into deciding which one of these things is like the best option for you. And Professor Smith is not scared to say if he thinks that you should just full pay because you have the money, he would definitely say that. All right. So if you have a tax controversy, so tax controversy just basically means a tax issue beyond filing, you're welcome to reach out to us. We are currently just doing phone communication post-COVID. So you would call this number up here, which you can find also on the tax or the clinic website. And we're open from 8 to 5, Monday through Friday. And what would happen is we would do an intake process first. So a clinic employee would first talk to you on the phone about your situation. She would get some details about your financial situation because we have to assess that you're a low income taxpayer first. It would kind of stink for us to start the process. And really, it turns out, you know, you have a lot of money via cryptocurrency and we can't help you anyway. And she's going to, or the clinic employee would then just get some information about what you're hoping to get or what's happened thus far. And then based on this information, Professor Smith would take it and he would decide whether we could actually help you or maybe we can't. So for example, if you call and you say, hey, I think I might owe money, but I'm not sure, but I'm going to file my taxes. Can you help me with filing the taxes that have to do with cryptocurrency? Professor Smith would say, I don't think we can help with that because that's not a tax controversy. But if you call and you say, hey, I have all these letters from the IRS, they're trying to collect on me, that's a tax controversy. And we'd be more like Professor Smith would assess whether we could help based on those facts, which seem plausible, and also your low income status. And then a student attorney or Professor Smith would then reach out to you for a client interview where we would start looking at all of your assets and look at your issue like in more close detail and figure out how we can help. Something that's worth mentioning is that the clinic is a 4-credit course and law students generally take about 14 credits a semester. I'm in 15 credits right now. So most of these issues will take a semester, if not longer, to start working through because law students are taking classes at the same time. We have a lot of responsibilities. We're getting ready to practice. So if you come in and you have something that urgently needs to be done, I mean, it's worth mentioning, but just know that the timeline of these things might take longer than you think. So for example, I have an offer and compromise candidate. I've been working with him for a year and we will submit his offer I think next week, honestly. And then it might take the IRS another year to process it. So these things take a while. And I think that that's worth mentioning because some of you will not be here for a long period of time. But nonetheless, if you have a tax controversy, you're welcome to reach out to us and hope you guys have a great rest of your Saturday.